Richard Harris, Chief Executive with Port Shelter, joins us. He, of course, is the investment management. He represents the investment management firm there. Richard, it's always nice to have you back on ET now. Is it the magic of liquidity which is blinding everybody?
Well, I'm not sure it's blinding everybody, but I think it's definitely having a big impact on what's happening. Clearly, the big, beautiful bill, or ugly bill, as you might call it, is going to have quite a big impact. You know, that's going to put trillions of dollars into the economy. And as we know, if you put that sort of money into the economy, it ends up in asset prices. So I think that equities are taking some strength from that. But I think one of the biggest reasons why we've seen prices move up recently is because Trump comes in with a scary figure or scary announcement, such as the 2nd of April tariff increases. And what we've seen since then are rollbacks from them. So the market's seen each little rollback as a victory, as good news. So bit by bit, it's priced things back up again. And I think that that's what we're seeing at the moment, that we're actually seeing small pieces of good news. But if you look at the good news, you can sort of say, well, tariffs in China were going to be 145%. Now they're going to be 50%. Maybe they'll be lower. Vietnam, 48% or something. Maybe they'll be 20%. That all seems to the market to be good news. But in reality, that 20% is still very high. It's a lot of cash to find for American buyers, because of course they're the ones who are going to be paying at the end of the day. So you have to think that that's going to have a detrimental effect on trade and a detrimental effect on growth that'll counteract all the positive features that the big beautiful bill was intended to have.
So Richard, just wondering, now that 9 July approaches closer and closer, what can we hear on the tariff front?
Well, you know, the extraordinary thing, if you do a survey of how much people have been searching for the word tariff, it's gone down pretty well solidly from April 2nd. And what we've had over the last couple of weeks, we've had a lot of news about Iran, a lot of news about global politics, what's going to happen to oil we've been talking about. Most recently, we've been talking in the last week about what's happened to the big, beautiful bill. Well, that was strong-armed through. Now the markets are going to start focusing on tariffs. But they've really not paid much attention to it since April the 2nd, thinking that Trump is going to chicken out. Well, we'll have to see if that happens. But on those countries that have signed deals with the US already, tariffs are an awful lot higher than they were at the beginning of the year. So I think that that is really the factor that we should be looking at, not the fact that we've had good news coming because some of these very high tariff levels have been reduced.
So Richard, what should one do? I mean, that is the most important question. Whatever we are discussing, I think is well known. It is a strategy what you adopt at an all-time high, which essentially will differentiate the portfolio return. If you sell now, well, you miss on the uptick. If you don't sell now, well, you regret because this market already is looking bloated.
Well, what's basically happening is that there's a big delay in numbers. The big factor that's confounded economists, of course, is how is it that we've seen the economy stay fairly strong despite all these potential features of bad news coming around? Well, a lot of the bad news hasn't hit yet. Higher tariffs haven't necessarily hit. Issues with the deficit haven't necessarily hit. We've got some forward running, if you like, with the fall in the US dollar and pretty firm 10-year rates. But generally, the bad news hasn't really hit yet. That's further down the line. And it's going to be the same with the big, beautiful bill. The tax cuts are going to happen soon. The benefit cuts are going to happen later and over time. So initially, I think the markets will still stay pretty buoyant because they won't have an awful lot of reason to sell off.
So Richard, if you have to, let's say, punch in one trade, only one trade, you allowed only one for rest of the year, what will that trade be? Only one trade, Richard.
You're pitting me to the mast. I think equities, maybe less weighted, less highly weighted than they have been previously, but I think equities will still continue because bull markets die hard.
I really appreciate it. I'm so glad you could join us. Now, where do we stand in terms of